Welcome back, my friends. Today we hear the news that Microsoft stock hit a record after executives predicted $10 billion in annual revenue from artificial intelligence. Microsoft shares climbed 3.2% to a record Thursday and are now up 46% this year. The company could pick up $10 billion or more in annual artificial intelligence revenue from developers using its Azure Cloud or OpenAI's models, an executive said this week. J.P. Morgan analysts raised their price target on Microsoft stock Wednesday. What does it mean for big tech companies? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the healthcare professional knows the patient identity. Microsoft shares climbed to a record Thursday after analysts at J.P. Morgan Chase touted the software maker's growth prospects in artificial intelligence. The stock rose 3.2% to close at $348.10, topping its prior all-time high reached in November 2021, the same month the Nasdaq peaked. U.S. indexes enjoyed a broad rally, following the Federal Reserve's announcement Wednesday that it would hold off on increasing interest rates. Microsoft nears all-time closing high, $2.6 trillion value, amid AI-powered rally. Microsoft's early mover advantage in AI has helped it surge past Google and possibly challenge Apple as the world's most valuable tech company. Microsoft shares hit a fresh record high Thursday, valuing the tech giant at nearly $2.6 trillion. Its early mover advantage into AI technology looks to challenge Apple's place as the world's most valuable company. Microsoft stock has added around $770 billion in value so far this year, and alongside Nvidia has become one of the hottest tech names in the market, since unveiling a $10 billion investment in OpenAI, the maker of the AI-powered ChatGPT search engine tool, in early January. The group has touted the potential of ChatGPT, a tool that uses human language to process instructions and which is being embedded in the tech group's also-ran search engine Bing, to close the gap on market leader Google, the eponymous lead product of parent company. Investors are betting that AI adoption will help Microsoft, which generated just $3.2 billion in search revenue last year, challenge the market dominance of Google, which churned around $43 billion. Microsoft is also looking to embed OpenAI's technology into its other business units, such as More Personal Computing, which hosts its Windows product, and Productivity and Business Processes, where it places its Office 365 platform, through its use of so-called copilots. CFO Amy Hood, in fact, said in a recent presentation that generative AI will be the fastest-growing $10 billion business in our history. Others suggest it could be Windows 95 inches moment in which Microsoft establishes leadership in the most transformational technology we have seen since the internet started to take shape, according to Wedbush analyst Dan Ives. While this newly released artificial intelligence reflects not only a significant leap in technological capabilities, it also reflects an immense monetization opportunity amongst the many industries as we see human-like artificial intelligence in its early stages, Ives said. We believe that Microsoft is in a unique position to gain share in the cloud market that could expand Redmond's total addressable market around cloud by 40% over the coming years, Ives continued. Microsoft shares were experienced a year-to-date gain to around 47%. The stock hit a fresh all-time high of $349.34 each earlier in the session. Its all-time closing high is $343.11, recorded in late November of 2021. Microsoft's market value of around $2.57 trillion sits just 13.6% south of Apple's and nearly $1 trillion ahead of Alphabet. The group is also powering ahead with profits from its established business lines, including its intelligent cloud unit, even amid slowing revenue growth in its flagship Azure product. Microsoft said in late April that Azure sales rose 27% from last year over the 3 months ending in March, missing street forecasts and slowing from earlier gains in the mid to high 40% range as companies continue to pull back on digital infrastructure spending. Overall group revenues, however, rose 7.2% to $52.9 billion for Microsoft's fiscal second quarter, coming in well ahead of analysts' estimates of a $49.36 billion tally. Intelligent cloud revenues were pegged at $22.08 billion, against ahead of the street's $21.26 billion forecast and up 22% from the same period last year. Microsoft's adjusted earnings rose 10.4% from last year to $2.27 per share, just ahead of the street consensus forecast of $2.23 per share. Net income rose 9% to $18.3 billion. Looking into the final 3 months of its fiscal year, which ends in June, Microsoft said it sees intelligent cloud revenues of between $23.6 billion and $23.9 billion, implying an 8.2% sequential growth rate. Still, AI looks like the most exciting driver of mid and longer-term growth, with Copilot adoption in Office 365 and Windows, alongside market share gains for Bing, potentially generating annual revenues of $100 billion by 2027. CFRA analyst Angelo Zeno, who recently lifted his price target on Microsoft to by $40 to $370 per share, also sees further upside to estimates as new AI capabilities emerge across Microsoft's ecosystem of products. Could the artificial intelligence explosion save the market and maybe the economy? For those of you not familiar, NVIDIA is a technology company that specializes in designing and manufacturing graphics processing units, GPUs, and related hardware and software technologies. It was founded in 1993 and has since become one of the leading companies in the field of visual computing. And Microsoft is not the only company rocketing to success on artificial intelligence. A blockbuster profit report from NVIDIA crystallized an important point for both markets and the economy. For better or worse, artificial intelligence is the future. Whether it's personalized shopping, self-driving cars, or a broad array of robotics uses for healthcare, gaming, and finance, AI will become a factor in virtually everyone's lives. NVIDIA's massive fiscal first quarter earnings helped quantify the phenomenon as the firm nears an elite cast of tech leaders with $1 trillion market valuations and clear leadership status both on Wall Street and in Silicon Valley. For NVIDIA, the upside already has been apparent. As if profit of $1.09 a share on revenue of $7.19 billion, both well above Wall Street estimates, wasn't enough, the company guided it was expecting $11 billion in sales for the current quarter, largely driven by its leadership position in the AI chip supplying business. Initially, NVIDIA focused on developing GPUs for gaming and consumer graphics applications. Their GPUs were highly regarded for their performance and became popular among gamers and computer enthusiasts. Over time, NVIDIA expanded its product line to include GPUs for professional visualization, data center, and artificial intelligence (AI) applications. The company's GPUs are often used in industries such as gaming, film and entertainment, automotive, healthcare, and finance. In addition to GPUs, NVIDIA has developed other technologies that complement their graphics processing capabilities. NVIDIA has also made significant contributions to the field of AI with their deep learning and neural network technologies. Furthermore, NVIDIA has ventured into the development of autonomous vehicles with their NVIDIA Drive platform. This platform provides the necessary hardware and software tools for automakers and developers to create self-driving cars and advanced driver assistance systems, ADAS. It combines AI, computer vision, and high-performance computing to enable autonomous navigation and real-time decision-making. Overall, NVIDIA has established itself as a prominent player in the technology industry, particularly in the areas of GPUs, AI, and autonomous vehicles. Its innovations have had a significant impact on various sectors, pushing the boundaries of what is possible in graphics, computing, and AI applications. So far, Big Tech has collectively benefited most from the buzz around general AI. We think this trend will continue given their ability to leverage their global scale and large competitive moats when utilizing this disruptive technology. Gen AI may end up making US Big Tech even bigger and more systematically important, rather than allowing upstarts to play the classic role of disruptive innovators. By now, I think that we have all heard that Microsoft has invested billions in OpenAI. OpenAI is an artificial intelligence company and the maker of ChatGPT. Artificial intelligence, AI, refers to the ability of machines to perform tasks that would normally require human intelligence to complete. This involves creating intelligent algorithms and computer programs that can do human-like things. ChatGPT has become incredibly popular. It is a conversational artificial intelligence chatbot. It is run by Sam Altman, a former president of Y Combinator. According to Altman, ChatGPT has the potential to replace the Google search engine. And that will definitely hurt Google's ad revenue business model. If you follow this channel, you already know that Google's ad revenue business model is under enough threats. ChatGPT has amassed over 1 million users in just 5 days after its public launch in November. It has the capability to generate singular answers to many types of questions. And it responds in a conversational, human-like way. It works by collecting information from millions of websites. Users have asked the chatbot many types of questions. To write a college essay, provide coding advice, and even serve as a therapist. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.